Nigerian upstream sector recorded a year-on-year increase in output, averaging 1.63 million barrels per day of crude oil and condensate in August 2025, up from 1.58 million barrels per day in the same period last year. Welcome to Business Points, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. In a statement by Eniola Akinkotu, Head Media Strategic Communication, NUPRC says this is based on crude oil and condensate production for August 2025 released by the NUPRC. A breakdown of the August 2025 production comprises 1.43 million barrels per day of crude oil, which grew to 5.47% compared to August last year, which posted a daily crude oil average of 1.63 million barrels per day. This reflects a steady recovery and improved operational performance across the industry. Daily condensate production in August stood at 197,229 barrels per day, reflecting a slight decline from 220,435 barrels per day in August 2024. Notably, Nigerian crude oil output in August met 96% of Opec quota, which is set as 1.5 million barrels per day. This demonstrates the country's capacity, its production targets under the Opec arrangement. On a month-on-month basis, there was a slight 4.7% drop in combined crude oil and condensate production from 1.71 million barrels per day in July. Similarly, crude oil production itself declined by 4.8%, down from 1.5 million barrels per day in July 2025. The month-on-month drop was driven by a single day unscheduled maintenance at an oil facility. In the month of August, the lowest and peak combined crude and condensate production were 1.59 million barrels per day and 1.85 million barrels per day, respectively. In the review month, Focado's terminal topped the production charts, delivering a total of 8.99 million barrels per day, including 8.08 million barrels of crude oil and 915.2 K barrels of condensates. Following closely was Bonny Terminal, which produced a combined 6.26 million barrels, consisting of 5.8 million barrels of crude and 418.27 K barrels of condensate. Meanwhile, Akwa Ibom terminals recorded a total of 4.99 million barrels with 4.94 million barrels of crude and 50.5 K barrels of condensate. Escrovers oil terminals also made a solid contribution, producing 4.18 million barrels, comprising of 4.08 million barrels of crude oil and 107 K barrels of condensate. New guidelines from the National Pension Commission have banned significant cross-shareholding in multiple licensed pension fund operators. In the guideline issued on Friday, which became effective immediately, the regulator stated that the move would promote transparency and good governance while protecting pension assets. According to pensions, significant cross-shareholding is a situation in which significant shareholders in LPFO thereafter seek to require a significant shareholding in another LPFO, or otherwise becomes legally entitled, whether directly or indirectly, to hold such significant shareholding in another pension entity, by means including but not limited to the conversion of debt to equity, operation of the law such as transition on debt or other form of vesting. Secondly, significant cross-shareholding arise from mergers and acquisition across outside the pension sector, which leads to individuals or entities holding equities for 5% or more multiple LPFOs. Prohibiting such as situation, PENCOM says no person shall hold or continue to hold, otherwise enter into arrangements or agreements that would result in holding or continue to hold a significant cross-shareholding for the purpose of determining whether a person holds a significant shareholding. The Commission aggregates the shareholdings of such person with those of its related person. The restriction on significant cross-shareholdings applies regardless on how the stake is acquired, whether through mergers, acquisition within or outside the pension sectors, direct investment, new licensing, or other means whatsoever. The goal is to ensure that no shareholders or applicant company owes a direct or indirect ownership or shareholding of 5% of more in more than one LPFO. These include affiliates, holding companies, subsidiaries, and related parties of shareholders, as well as its directors, employees, spouse, and family members of shareholders of the new companies. For new significant cross-shareholding already existing, PENCOM allowed a 6-month transition period of a comply with a new guidelines. Let's take a quick short break. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Points, where we extract the Nigerian economy and the government's policies. The move to diversify Nigerian export portfolio seems to be yielding results as the value of manufactured goods exported from the country in the first year of 2025 surged by 46.76% to 1.1 trillion naira from 749.5 billion naira in the corresponding period of the previous year. Analysis of the report of foreign trade in goods by the National Bureau of Statistics over the last 5 years shows a rising trend from 2021, but there has been a significant jump from 2023, coinciding with the naira depreciation occasioned by the unification of the foreign exchange market by the Central Bank of Nigeria in June 2023. A breakdown of the available data from NBS reveals that manufactured goods exports stood at 304.09 billion naira in the first half of 2021, 338.61 billion naira in the first half of 2022, and 343.29 billion naira in the first half of 2023, jumped to 749.52 billion naira in the first half of 2024 and 1.10 trillion naira in the first half of 2025. Further analysis indicates that 1.1 trillion naira worth of manufactured goods exports in the first half of 2025 represents 6.67% of the total manufactured goods traded in the period, which stood at 16.49 trillion naira. This shows a marginal increase in the export component of the total manufactured goods in the period under review when compared to the corresponding period of the previous year, which was 6.21%. Analysts have attributed the apparent increase in export manufactured goods to depreciation of naira. According to them, the depreciation of naira has made some goods produced in Nigeria to become cheaper, while CFA France, a legal tender in Benin, Burkina Faso, Cote d'Ivoire, Guinea-Bissau, Mali, Niger, Senegal, and Togo continue to appreciate in value. President of the Nigerian Economic Society, Adeola Adeni Kinju, noted that the valuation of currency helps to make export of goods cheaper. Corroborating this view, Chief Executive Officer of the Center for Promotion of Private Enterprise, Dr. Muda Yusuf, also attributed the increase in exports partially to naira depreciation. Center for Promotion of Private Enterprise have called on the Central Bank of Nigeria to adopt a more balanced policy stance as small and medium enterprises continue to face difficulty accessing affordable credit. The Chief Executive Officer of CPPE, Dr. Muda Yusuf, stated this in a review of the 2-year of Yemi Cardoso as Central Bank Governor, that while the Apex Bank had made progress in stabilizing the financial system, its restrictive policy had worsened the credit constraint of businesses. The monetary policy rate at 27.5% and cash reserve ratio at 50% have considerably pushed up the cost of funds. Elevated lending rates have suppressed private to finance system, structural financing that remain unresolved. He added that small and medium enterprises limited access to affordable credit infrastructure, industry, agriculture, construction, estate projects lack patient capital and affordable loans. The CPPE boss praised the CBN progress in liberating the foreign exchange market, strengthening corporate governance, and introducing recapitalization measures to enhance banking sector resilience. He also acknowledged that the Apex Bank had contributed to a deceleration in inflation through monetary tightening and liquidity management. However, he cautions that a fully market-based approach, while improving efficiency, has not addressed structural financing gap, stressing the need for target intervention. Yusuf recommended that the CBN calibrates its policies downward as inflation moderates to create a more enabling credit environment. He urged the Apex Bank to develop credit guarantee scheme and concessionary financing program for SMEs and critical sector, as well as promote development finance instruments to support infrastructure. He also called for institutionalization of governance reform, stronger legal framework to protect CBN's autonomy, and clear policy communication to manage market expectation. Transaction on the Nigerian Exchange Limited plunged 49.95% in August 2025, falling to 908.38 billion naira compared to 1.815 trillion naira recorded in July. The latest domestic and foreign portfolio investment report from the NGX shows that the sharp decline was primarily due to the absence of block trade, which had its significantly boosted transaction volume in July. A further breakdown reveals that domestic transaction fell 55.87% to 736.57 billion naira in August from 1.6691 trillion naira in July. Retail participation dropped to 33.46% from 516.50 billion naira in July to 343.67 billion naira in August, while institutional investors recorded a much steeper decline of 65.91%, sliding from 1.1526 trillion naira to 392.92 billion naira. Despite the slump in domestic participation, foreign investors increased their activities during the period. Total foreign transaction rose to 17.72%, climbing from 145.95 billion naira in July to 171.81 billion naira in August. This was driven by higher inflow, which stood at 95.14 billion naira compared to an outflow of 76.67 billion naira. Overall, domestic investors still dominate the market, accounting for 81.09% of the total value of transaction, while foreign investors contributed 18.91%. The report shows that domestic trade outperformed foreign trade by about 62% in the month under review. Total transactions stood at 6.916 trillion naira, almost double the 3.475 trillion naira recorded in the corresponding period of 2024. Out of these, domestic transactions accounted for 5.463 trillion naira, while foreign investors contributed 1.453 trillion naira. In comparison, the same month last year, the NGX reported that total market transactions surged by 139.35% from 379.52 billion naira in August 2024 to 908.38 billion naira in August 2025. A long-term review of the market data highlighted that over an 18-year period, domestic transaction increased 33.15% from 3.556 trillion naira in 2007 to 4.735 trillion naira in 2024, while foreign transaction grew by 38.31% from 616 billion naira to 852 billion naira over the same period. The report also noted that in 2024, Domestic transactions accounted for about 85% of total activities, while foreign trade made up 15%. In 2025, so far, the balance remained in favor of domestic investors despite the sharp pullback in August. Seplat Energy has committed a progressive dividend policy that will see shareholders receive at least $120 million, that is 179 billion naira, in dividend annually. This is based on the projection following its acquisition of Mobile Producing Nigerian Unlimited. Seplat expects this policy to deliver $1 billion in cumulative dividend over the 5 years, with a guaranteed minimum of $120 million annually. At its Capital Markets Day on September 18, 2025, the dual-listed energy company announced an increase in its third quarter 2025 dividend to 5.0% share, setting a new base level for future quarterly payout. This is up from 4.6% share paid in the first and the second quarter of 2025. The revised dividend framework will return to 40 to 50% of free cash flow to shareholders annually between 2026 and 2030. Seplat's confidence in the new dividend commitment is backed by improved financial performance. The company generated $486.9 million in operating cash flow in the first half of 2025, nearly 60% higher than full year of 2024. All right, this is where we draw the curtain on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on terrestrial Star Times. To stay connected, kindly follow us on all our social media platforms as Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.